This is Matthew Cratter from Trade University, and today I want to answer the question, how low can Bitcoin go? Obviously, Bitcoin is not something that anyone can control. It's not a tame lion, as I like to say, with reference to Aslan and the Narnia Chronicles. Bitcoin can do whatever it wants to do. It could theoretically go back down to $500 per Bitcoin on its way to zero or on its way to a million. So any trajectory really is possible. But what outcome is most likely? As we've been talking about on this channel for the past few months, the Fed, the Federal Reserve, which is a central bank in the US, is hell-bent on hurting risk assets to reduce demand in an effort to reduce inflation. This is ultimately not going to work. At some point, the Fed's going to have to reverse course. But until they do, stocks and Bitcoin will continue to sell off. Now, the Fed's not going to reverse course probably until we get some extreme credit event, something really big blowing up, maybe in the plumbing of the U.S. financial system, in the money markets, in the financial plumbing, in the treasury market. We might get extreme liquidity, big gaps between bids and asks, or something like that. But until that happens, the Fed is not going to stop. We don't know when this is going to end, and we don't know what the Fed is going to do, but we do know price levels that have been important to Bitcoin across multiple Fed cycles. This Fed cycle is a little bit different, but I still think it's useful to look at historical charts to get ideas of very, very key price points on Bitcoin. So the first chart we're going to look at is the weekly chart of Bitcoin. So each of these bars, each of these candlesticks is a weekly bar. And then the blue line at the bottom here is the 200-week moving average. This is a widely observed line in the sand. And Bitcoin has a tendency to mean revert back down to this line. This line has always been upward sloping in the entire history of Bitcoin. This is a line that keeps moving higher. Currently, the 200-week moving average sits at 21,960. So this is the average of weekly closing prices for the past 200 weeks. Now we can see that during times of crisis, so let's say the whole financial meltdown that happened at the beginning of the pandemic in March of 2020, Bitcoin actually traded very briefly below this line. The line was at 5,500 and Bitcoin got down to 3,850 in sort of a flash crash, and then immediately mean reverted. It didn't spend any significant period of time, just a few days below this 200-week moving average. And so this is one line in the sand, or one possible price target that we could see, especially if the Fed stays as aggressive as it has been. We could see Bitcoin trading down and even below this level. It shouldn't stay too long below this level if it behaves the way it's behaved in the past. In 2019, this also acted as really good support, but this is an area that we could be expected to revisit if risk assets keep selling off and the Fed stays as hawkish as it currently is. So that level is 21,960. If you're finding this video helpful so far, be sure to hit that subscribe and like button, especially if you watch this channel a lot and you haven't subscribed yet. So that's the first metric, the 200-week moving average. Now we're going to look at something called the MVRV ratio. MV just stands for market value. You can substitute market cap. In other words, you take all the coins, all the Bitcoin that are circulating, and multiply it by the current price. Realized value is, RV stands for realized value, realized cap, or realized market cap. What this is you basically take each UTXO on the chain, each discrete chunk of Bitcoin, and you multiply it by the last price that it moved on chain. So when there was last a transaction involving that UTXO on chain, what was the price of Bitcoin? This is obviously something that's very difficult to calculate unless you really are good at manipulating data. But I'm going to show you a place where you can find out this number. So what you then do is you have the market cap, you have the realized market cap, and you take a ratio of them. You take MV divided by RV. This can also be thought of as the current market price per Bitcoin, which would be in the numerator, divided by the average on-chain cost per Bitcoin. So you can either use the really big market cap numbers in the numerator and denominator, or you can use price per Bitcoin. This is very similar for those of you who know how to calculate the PE for a stock. The PE for a stock you can either do it per share or you can do it for the entire market cap. So you could divide net income into market cap, and that would get you the PE, or you could divide earnings per share into stock price per share. And so that's why we're going to be looking at this in two different ways. You can either look at the ratio, so MV divided by RV, and this will be somewhere, usually somewhere between, call it 50% or 0.5, and you can get as high as 5 or something like this, even though we haven't gotten quite this high. The highs have been around 3 in this ratio. But the important thing we're going to look at here is how far below you can go, how far below 1. If we're trading right at 1 on this chart, that means the price of Bitcoin in the free market, the price that's quoted on Coinbase or Kraken or Gemini or wherever, the price per Bitcoin divided by the realized price is equal to 1. That would mean you're trading right at the realized price. If this ratio is less than 1, as it was in March of 2020, that means that Bitcoin's price, its market price, is trading below its average on-chain realized price. So this got as low as 0.85, 85% in the crash of March of 2020. The previous low from 2019, it got down to about 70%. In other words, the market value of Bitcoin got down to just 70% or 30% below the realized price. And then if you go back in history, you can see that it's traded as low as 55% and as low as 39% very early in Bitcoin's history. But what changed is that this ratio was invented sometime in 2018 or 2019. And once a ratio or a metric is invented, then everyone's looking at it and it changes the behavior. So for this reason, I would say it's quite unlikely that we see prices below the previous low in this ratio. So the previous low in this ratio would be 85%. In other words, the price of Bitcoin is trading 15% below its realized, theoretical price. You could go, I suppose, as low as 70%, but I think this was, especially March of 2020, was such a high time of financial distress. This is probably a realistic low for this. Once this metric's been invented, you can't have lows of 40% of the realized value, especially when there's so many people watching this metric, especially when Bitcoin is such a mature market as it is now. Back in 2011, 2012, it was very, very difficult to buy Bitcoin, and there are fewer people watching it. So we're going to do a calculation here. We're going to assume that Bitcoin goes down to 85% of its current realized price. What's its current realized price? This is something that you have to find online. This is from a Glassnode weekly update. This is publicly distributed. This isn't part of their paid thing. If you want to get this in real time, it's something like $700 per month to access all these metrics on Glassnode. But you can usually find it on Twitter, the latest number in someone's tweet, or you can find it in Glassnode on-chain weekly insights. The realized price for Bitcoin is roughly $24,000. This might be $100 off either way, but this is the average on-chain price at which each UTXO moved. And the other way of doing it, of course, is dividing the realized value into the market cap, as we talked about. So another way of calculating a potential low for this cycle is to take 85%. Remember, this is the distress levels of March of 2020, where Bitcoin went 15% below the realized price. In other words, it traded at 85% of the realized price. If we do this calculation, we'll just take 85% of 24,000. That gets us roughly 20,400. So we see why these levels, anywhere between what was the 20-week moving average at, that was at 22,000, and then the lower bound here is around 20,000. This is a very, very key level. If Bitcoin goes below this, I'm not going to be happy. I'm not going to sell my Bitcoin, but it really should not trade for any extended period certainly below 20,000 is what I would say. The other thing that makes 20,000 very significant is it was roughly the high of the previous cycle. And so if we were to spend an extended period of time below the high of the previous cycle, this would definitely not be a good sign for Bitcoin. Again, I'm a true believer. I'm going to hold this thing down to zero. I'm going to hold it all the way up to 1 million and beyond. I'm never selling it for any reason, just because even if it trades below this, we could still have a bright Bitcoin future. But it's not going to be, I'm not going to be happy. I'm not going to be a happy camper if we start spending time below 20,000 on Bitcoin. We could spike down. I wouldn't be surprised if you get a huge liquidation event. You could get, a spike down to 15,000 or something like that that lasts a couple hours or maybe a day at most. But we shouldn't be spending any time below 20,000 for both of these reasons, both for the 200-week moving average reason and also for the MVRV ratio reason. So this is how I'm thinking about it. I'm also gauging Fed policy. I think this is the most important short-term driver. If we get a huge capitulation event in stocks where they really crash and you get the Dow down 5% or 10% in a day, then this is how you break below 20,000 in Bitcoin. So it remains to be seen. We're really playing a game of chicken here, or the stock market's playing a game of chicken with the Fed, and the Fed is going to relent. It's just a question of when, because the government can't stop spending money. That means the government can't stop borrowing, and the Fed is the borrower of last resort. So they're going to have to start printing money to buy U.S. government debt at some point, probably later this summer. But in the meantime, things can be quite choppy and ugly. But I thought this would be one way of approaching how I'm thinking about possible floors in Bitcoin's price until we get to that point where the Fed reverses course. When the Fed reverses course, especially if they end up doing yield curve control, we will easily be back. I know it's hard to imagine this right now, just as like when you're really cold, it's very hard to imagine being warm or hot. And when you're really hot, when your body temperature is hot, it's hard to imagine being cold. I think bear markets and bull markets are very similar. Right now, it's hard to imagine Bitcoin getting back up to 69, 70,000, but I think it'll happen fairly rapidly when the Fed reverses course. In the meantime, we're in this very difficult environment. I'd encourage you to get outside. Don't be glued to the price, but these levels might help you in setting your limit price orders on the exchange. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.